The mandate of the Minister of Finance and Economic Planning is to manage the national economy and to ensure macroeconomic stability and economic development. The Kigali International Financial Center plays and will play a great role in our Vision 2050.
Kigali International Financial Center has been created to promote Kigali as a platform for financial innovation and financial investment in Rwanda, but also across Africa. And it has had a very good start and been able to attract a number of noticeable players already, and is continuing to do so.
The Kigali International Financial Center is coming within a context of rapid economic growth in Rwanda. Today, if you want to do business across the continent, we offer you Rwanda as a hub. You come here, you set up your business here, and then you can expand to the rest of the African continent.
In terms of untapped opportunities in Africa, we have access to expand. We have a very large untapped market, can be catalyzed by technology today. Africa has the highest mobile penetration. That is in itself a really good opportunity to transmit those financial services.
We are in the middle of the digital transformation. We have new ways how to interact with finance, with our fingertips on our smartphones. In the financial industry, we call it Fintech, financial transformation. This kind of trends, we have a big impact in the future.
Fintech is a key component of what we want to do in Rwanda, and that will have positive externalities for Rwanda, but also for Africa.
There are certain areas that require our attention in society, where we haven't solved problems. And the one is financial products for young people, where you don't necessarily require collateral and where someone's financial background doesn't play a role. As an organization and as a founder, I believe that you need to stay as close to impact as possible. That's why our headquarters are based in Rwanda, because most of the students that we finance are based in Rwanda. So it's natural for us to want to base our fund in Rwanda.
One of the advantages investing through KIFC has is having those DTAs with fellow African countries helps to ease, business entry from Rwanda to the rest of Africa. And having a young team of professionals whose single focus is to help you set up your business has been one of the most beautiful experiences I've had worldwide doing business.
One of the critical factors here is having a credible framework that the market will accept. We mean the right laws, we mean the right regulations, we mean the right approach to compliance, and Rwanda at great speed are passing these laws, and that's very encouraging to see.
When it comes to Africa is a growing market. Now recently, 55 countries of Africa have decided to embark on the Continental Free Trade Area, which is the largest globally. And this makes even more attractive Africa as a destination for investment.
This is a game changer for the continent for a number of reasons. First, there will be increased focus in the trading of value-added products and services. There will be the benefit of comparative advantage as well between countries. There will also be the benefit coming from the fact that intra-African trade transactions will be settled in local African currencies.
The financial sector plays a key role in the functioning and the development of any economy. That is the place where people who are innovators and entrepreneurs and who need capital meet the providers of capital. And there can be no economic growth, no successful businesses if that connection is not done effectively and efficiently.
Financial innovation is key to unlocking sort of our economic growth on the continent. And the fact that Rwanda is leading that is again showing how it's being sort of a beacon of light around financial innovation. Making Rwanda a financial center will have a significant impact for the region.
This is Africa's turn. It's happening, and the financial services is at the heart of that. It's the lifeblood, it's the heart, it's the lungs. I mean, any metaphor, analogy you can take, financial services is indispensable to finally lift Africans out of poverty, provide them with the jobs they need and the prosperity they need.
Distinguished partners and guests, good morning and welcome to Kigali International Finance Center's Year in Review. My name is Makeda Mahadio and I will be guiding you through today's program. Now today is very special because it is a very first. KIFC is presenting you their first Year in Review, and so we thank you so much for being here with us today. In order to give the opening remarks, I would like to invite to the stage the CEO of Rwanda Finance Limited.
Good morning, good afternoon, good evening, distinguished ladies and gentlemen. I'm Nick Warije. I'm the CEO of Rwanda Finance, the agency mandated to develop and promote Kigali International Financial Center. It is a great pleasure to welcome you to KIFC's first annual event, A Year in Review. Despite the heightened uncertainty associated with the emergence of new variants, the vaccine rollout as well as monetary and fiscal policy initiatives will mean that we are on a path to a resilient growth in 2022. This will be further boosted by the recent announcement that biotech will open its first African manufacturing facility in Rwanda, establishing sustainable vaccine production lines for citizens of Rwanda and beyond. Beyond COVID-19, 2021 has been a year of significant achievement. Rwanda has again been noted as one of the countries on the continent of ease of doing business, and a recent report by Merchant Bank saw Rwanda move up the rankings as the fourth most favorable African market for investment. In terms of achievements in the year to date, to list but a few, 6 tax treaties have been signed, 16 laws have been gazetted, 25 investors have been attracted into our ecosystem. To quote the president of the African Development Bank, President Edisena, Africa is the world's next frontier. And it is a continent that is at a critical juncture to implement bold, transformative reforms and capitalize on this potential. KIFC is committed to work in close cooperation with our partner IFCs across the continent and over the world to facilitate Pan-African investment, to provide quality financial services to international investors, unlock the continent's enormous potential. The spirit of cooperation has led KIFC to join the World Alliance of International Financial Centers, an organization that facilitates cooperation between financial centers. However, many will argue that the relationship between international financial centers is more competitive. And perhaps it's a healthy dose of competition that is required. It is in light of this interesting debate that this morning we are hosting a panel discussion entitled The State of Play of International Financial Centers. Is it collaboration or competition? This session will be followed shortly by a Q&A virtual session. Ladies and gentlemen, I shall now pass on to my colleagues to present the annual report, and I hope you enjoy the rest of the program. I thank you for your kind attention. Now, as it is at RFL, I take this moment to welcome on stage one of my girls, Lady HM, who will take you through the next session of the program. I thank you.
Good morning to you, ladies and gentlemen. My name is Hortense Modenge, and I'm the Chief Operations Officer at Rwanda Finance. As much as this year has been about countries adapting to the COVID-19 pandemic, and building resilience to the side effects it has had on much of our economy, 2021 has also been much about reform and growth, especially for Rwanda's financial services sector. The growth in financial services has accelerated much of the initiatives we have undertaken this year to position Kigali as an international financial center. Over the last 11 months, we have continued to build an enabling environment for investment, not only for Rwandans, but also for regional and international investors. Our work has cut across 4 key pillars, including policy, tax, skills development, and investment attraction through business development activity, as well as promotion of our center and ecosystem. Now, my colleagues will go more into detail on each of these pillars. However, I want to draw your attention to 3 key milestones we have achieved this year that have enhanced our center's reputation for compliance, Pan-African connectivity, and the ease of doing business. Number 1, as our CEO pointed out previously, 16 laws have been gazetted to foster and facilitate increased cross-border investment activity for investors established in Rwanda. Number 2, Rwanda has signed international tax treaties and investment protection agreements to do away with double taxation and to ease the tax burden on investors operating across multiple jurisdictions. As an active member of the OECD Global Forum as well, Rwanda has signed global tax commitments to increase collaboration on the exchange of tax information. And third, but not least, strategic partnerships. The partnerships we have built with other financial centers, such as Qatar, Luxembourg, and Singapore, have been critical in building mutual recognition for investors across our jurisdictions and growing investment in our emerging niche areas, such as fintech and sustainable finance. In a nutshell, 2021 has seen us take a lot of action, and we have the pleasure to share some of these highlights with you today. Thank you.
Thank you, Hortense. Now, before we dive into the rest of our program, just a quick note from you, or for you rather, we would love to hear from you. If you would like to have your insights heard, please use the hashtag KIFC Annual Review 21. We'll be looking out for you. Now, our next presenter is the Chief Finance Officer.
Ladies and gentlemen, good morning, good afternoon, good evening. I'm Jean-Baptiste, Chief Finance Officer at Rwanda Finance. The development of Kigali International Financial Center is a result of National Strategy for Transformation and Financial Sector Strategic Plan for boosting the financial sector. The Rwanda is aiming at becoming upper middle income country by 2035 and a high income country by 2050. This cannot be done if the financial sector is not developed. Rwanda's financial sector has continued the growth. It has marked 10.4% of the increase in financial services in the Q1. This is reported from the Central Bank Monetary Policy Report. When I talk on financial services, I mean the savings, credits, insurance, and transactions. Out of this increase, there is a 20% increase in total assets. The total assets of the bank or financial sector means what? Means the capacity of continuing the service and the banking sector with enough liquidity for boosting the financial services. Under this 20% increase, the banking sector represents 67% of assets. This means that the banks have the enough liquidity to serve to the beneficiaries or who need of the money. Not only the banking sector, there is also the capital market industry. The capital market industry has grown by introducing the issuance of corporate bonds. When I talk about the corporate bonds, I mean the accessibility of the financing by the company or either the people who have their money to invest, they can buy those bonds from the stock exchange market. And this has been marked by introducing the new SME corporate bond of Energy Hotel. This is recently listed, apart from the shareholding of the companies, but also the corporate bonds. In addition to that ones, those cannot be achieved if they are not service providers. Their introduction also, the trust and service providers. These corporate service providers, I mean the tax advisory, the auditing firms, the lawyers, and other ecosystem players. Thank you very much.
Thank you, Sunday. Next, we'll be hearing from KIFC's Chief Legal Officer.
Hello, distinguished viewers. Good morning. I am Anthony Mukulu, the Chief Legal Officer at Rwanda Finance. Today, I'll speak to the legal reforms that have been undertaken, and I would want to first start with the question, what is not Kigali International Financial Center? We are not an economic zone. We are an ecosystem of financial players, and we look to economic substance, and there is no ring fencing. Secondly, I would like to speak to what informed our reforms. First and foremost, we look to compliance, and with compliance, we had to incorporate OECD and Financial Action Task Force requirement. Secondly, we had to diversify the investment structures available. Number three, we had to look at ease of doing business. Number four, we had to incorporate the KIFC incentives that will be attractive to the investors. At this point, I would want to speak more about the categories of laws that we have reformed. Number one, we have the anti-money laundering laws, and here we have to speak to a couple of laws under this category. We have passed the law on prevention of money laundering, financing of terrorism, and financing of proliferation of weapons of mass destruction. Again, it's important to call out that we established the Financial Intelligence Center that will be in charge of monitoring any possible financial crimes within the ecosystem. Number two, we had laws relating to the regulators, and here we had to incorporate the supervisory functions that lead to the financial services to be incorporated in these laws. Number three, we also introduced other investment vehicles outside the normal companies that we know. For example, I would want to speak to the partnership law and the foundation law. These create diversity, and we also try to incorporate all the wishes and aspirations of the different investors on how they want to structure their businesses. And lastly, we also have a category of laws under financial services, and here we looked at adding the technological advancements that we see today regarding financial services. I also want to speak to the benchmarking trips that we have undertaken, given the laws and the new products and services. If I'm to speak to elements to do with registration of beneficial ownership information, these are aspects that we can't afford as a jurisdiction to get wrong from the beginning, because compliance, as said before by my colleagues, is at the heart of our jurisdiction. We have had a trip to Luxembourg, and other trips are planned in future with our partners. Thank you for listening, and have a good day.
Thank you, Anthony. Our next presenter is one that you've actually met already, but she's just so nice that we had to bring her on twice. This time presenting on strategy. Welcome back, COO Hortense.
Thank you, Makeda. Now I want to take you through some of the key aspects we have dealt with in terms of strategy. This year began with a focus on global recognition and expansion, and the case was not different when it comes to tax matters. Rwanda signed the Convention on Mutual Administrative Assistance in Tax Matters, a leading international treaty for multilateral cooperation in tax matters, which has expanded Rwanda's networks of tax information partners from 12 to 141. For KIFC especially, this is a milestone, as we are cementing our commitment to international standards for tax transparency, which gives more confidence to investors. As we increased our tax information partners, we also similarly expanded our network of double taxation avoidance agreements to include Luxembourg, Qatar, the Democratic Republic of Congo, Congo Republic, and China. These agreements will help to increase cross-border investment with jurisdictions, and will also give confidence to investors who will now be able to avoid being taxed twice on income. The development of Rwanda as an international financial center has also brought about a sophistication to our local financial sector, as more and more international investors come on board, bringing about the establishment of more sophisticated investment structures. This has resulted in a need to place more emphasis on specialized skill sets and to ensure that we have qualified professionals to serve the needs of investors. For this year, we started off implementing our capacity building strategy, which included the establishment of a framework for a National Financial Sector Skills Council that will be overseeing all capacity building initiatives for the financial industry. Second, we also saw a lot of sensitization and awareness campaigns around the key topics and subjects that we deal with as a financial center. And this began with the launch of the Masterclass program, where we invited on board special subject matter experts to speak to us on our key value proposition, compliance, as you heard from my colleague, Anthony, as well as international investment structuring. In addition, we also built our knowledge base, because at the end of the day, for an investor to make a decision, he has to be informed, much more specifically for us to be more informed on the region that we operate in. And this led to the launch of our research publications to see how we can position Kigali International Financial Center as a preferred center for investors looking to invest in the region and on the continent. So please do look out for most of these research publications on our website to learn more about the industry insights in the region, but also how you can leverage Kigali as a financial jurisdiction for your investment. Thank you.
Thank you again, Hortense. Now, just a quick reminder before we go on with our program, KIFC loves to interact, so please do not be shy. Have your voice heard online using the hashtag KIFC Annual Review 21. I think our next speaker will be very happy that I said that, because next you will be hearing from the Chief Marketing Officer.
Thank you, Makeda, and good morning, good afternoon, and good evening, as our colleague Sunday said, to our global audience joining from across the world. My name is Olivia Rubagumya, and I'm the Chief Marketing Officer of the Kigali International Financial Center. Outside of a safe, compliant jurisdiction with a skilled workforce, what else do investors look for? A jurisdiction they recognize. Building on Rwanda's powerful brand Rwanda, including Visit Rwanda, Made in Rwanda, that has exported both the tourism sector and manufacturing sector of our country across the world, Rwanda's financial sector needed an identity of its own. Therefore, in March, we revealed the Kigali International Financial Center's brand with its own voice and its own aesthetic, and in the past 10 months have introduced over 3,000 people in numerous events and webinars, and another 30,000 people through our social media and digital channels to this new, fresh KIFC brand. The news of KIFC has also reached regional and international markets through features in African Business Magazine, African Bankers Magazine, Jeune Afrique, The Economist, The Gulf Times, just to name a few. Beyond the wider public, we continue to introduce the Kigali International Financial Center brand through in-office visits, one-on-one meetups, webinars and events such as with CDC UK, and key local partners such as RDP through sensitization campaigns through the ecosystem. The culmination of our promotional efforts have arrived with the ranking on the GFCI index. In 2021, Rwanda was featured for the very first time on this premier index of global financial centers, ranking their competitiveness, but also their marketability. We are proud to say that Rwanda was ranked amongst the top 3 in brand promotion, amongst the top 5 in Africa's IFCs, and also named the top 15 financial centers to look out for that will become significant in the future. This is something that we take great pride in, and we are extremely happy to celebrate this milestone with you today and in the years to come. Thank you very much.
Thank you so much, Olivia, for giving us the bigger picture on where KIFC has been featured in only the first year. It's so exciting to see what's to come. And our final speaker is coming up next. He is the team's Chief Investment Officer.
Thank you, Makeda. Good morning, good afternoon, and good evening, everyone. My name is Tudi Muyelo. I'm the Chief Investment Officer of Rwanda Finance. It is a pleasure to be with you today and to talk about business development. We have heard from my colleagues the great work that we have been accomplished this year, from the policy reforms to skills development to all those review of laws, taxes, skills development. But at the end of the day, we want to see impact. So, what have we been achieving in terms of new source of funding for our continent? First of all, we wanted to be very intentional in the type of investment and capital to bring in Africa through Kigali International Financial Center. That's the reason why we started to look at green and sustainable finance. As you all know, the need for climate finance is tremendous. In Africa alone, there is more than 3 trillion need of financing. So the question is, how can we attract that funding in our continent? In Kigali, we took a very clear approach. First of all, to define our sustainable finance roadmap. This roadmap will enable the country to have the framework, to have the policy, to have the taxonomy, and to have the incentives to attract the capital. it is clear that this capital is to help SMEs. So we want to see and we want to know who are those SMEs that are actually contributing to this climate change. Reason why we have started a new initiative. That initiative is to provide a rating to SMEs, and we will be the pilot country in Africa to provide this rating to all those investors that are looking at the continent. We want also to see Rwanda as the core center for financial sustainable finance using our capital market. Reason why, looking at other financial centers, we are closely working with our colleagues from the Capital Market Authority to develop a green capital market. So, we want you to remember that when you look at Rwanda and Kigali International Financial Center, we are a center dedicated to climate finance. We talk about climate finance, we talk about green investment, but there is another key element in the DNA of Rwanda, and that element is technology, innovation. So as a center, we want to be known for Fintech. We are working hard to be the home of Fintech in Africa. And this translates in very simple framework that makes it easy for a Fintech to be licensed in Rwanda. You know, it's not easy to exist when you are in Fintech. We do understand that in KIFC. So, together with our central bank and the regulators, we have developed a sandbox concept. This sandbox is allowing innovative Fintech companies to come and to test their innovation in Rwanda. Because we also understand the need for Fintech to be close to financial institutions. Together with one of our strategic partners, Singapore, we have embarked in what we call API exchange, APIX. So what is APIX? APIX is simply a cloud environment that enables Fintech and financial institutions to connect and to build together those innovative solutions that will make finance more inclusive for everyone in Rwanda and in Africa. When talking about Fintech, it's also important to notice that Fintech is actually coming from startup. So in Rwanda, like in other African countries that are pioneers, we are developing a Startup Act. This Startup Act is providing not only a definition for startup, but also giving to investors a good reason to invest in those innovations here in Rwanda. We discussed green finance. We discussed about this new home of Fintech in Africa. End of the day, what we want to see is impact. And the impact is coming from the new capital coming into the country. This capital is serving Rwandan economy and Africa. And you are very pleased today to announce that we have been able to attract over $300 million commitment through Kigali International Financial Center. Very important, this new capital is source of funding, not only coming from investors from Rwanda, but coming from investors in North America, in Europe, in Asia, and of course, from Africa. Those investors, they are 25 registered today in Kigali, and we aim, of course, to have more in the near future. But what is important is to understand the relevance of those laws, those policy reforms, those tax reforms that have been accomplished in the country. Because those investors, they've been using our new investment structures. They've been using our new holding companies They have been using the new fund structures. And this is why it is important to continue to build this ecosystem and framework that will make it more attractive and competitive to use Rwanda. Today, we expect to see impact in different sectors of the economy, not only agriculture, also education, healthcare, just to name a few. Over 25 registered investors. Who are they? Where are they coming from? Allow me please to give you a few examples. I will just pick a few that are representing quite well not only the diversity of those investors, but also the importance of all those strategic partnerships that we have signed. The first one I will mention is actually coming from another IFC, Mauritius. The name is Juristax. Why picking Juristax here? Simply because we do understand the importance to have skilled professionals able to serve you when you are coming to invest through KIFC. And Juristax is one of those new type of financial institutions that we have in the country ready to support and assist you in establishing your entity, your business in the country. They are the one helping the environment, the ecosystem, to make sure that we are compliant. They are the one that will make your life easier to operate in Rwanda. That was one example. Let me give you another one. We know the importance to have DFIs for development financial institutions, because those institutions, they give the tone, they set the tone in the compliance of a financial center. And we are very happy to have in Rwanda one of the largest DFI in Africa, being the African Import-Export Bank, Afrexim Bank. They have decided to provide to the continent new source of funding, not only debt, but also equity. Today, we are very pleased to announce, not only to announce, to confirm that FEDA, F-E-D-A, this new platform from Afrexim Bank is operational in Rwanda. Again, this new source of funding is access to equity, long-term investment to companies that are facilitating intra-Africa trade. I will give you another example. The example is named Dakar Network Angel, DNA. DNA is a very nice example of this Pan-African positioning that we have in KFC. So we have business angels, meaning individuals that are based in Senegal. And they want to invest in those startups. They want to invest in innovation. Challenge for them, how to pull together over 50 investors in one structure to provide equity to startup, to innovation. They decided to use Rwanda. They have their investment holding entity in KFC, and they are providing this new alternative source of funding using our center. Last but not least, I will take the example of RH Buffalo, this listed South African company. The importance of the capital market, the importance of the stock exchange, how to get access to alternative source of funding using the stock exchange. They have demonstrated that even when you have access to one of the largest economies in Africa, when you want to get access to investment in East Africa, Rwanda is the best place to go for capital market. And now that we have those investors in the country, now that we know that we have access to this alternative source of funding, we are building a community of investors, of experts, of professionals that are like-minded people looking at expanding and growing our economies. So we have decided to launch what we called the KIFC Club. And this club is to promote those success stories. This club is to create a new dynamic to export the financial services of Rwanda, to export the professional services of our country beyond the region. I would like to give a few names that are very important here. Our membership has been open, and we have already seized a group like BK Holding, a local champion, being our first platinum member. We know that more are coming, not only from Rwanda, but also international. We are looking forward to see, for example, our big investment fund that have been announced a few weeks ago, the Virunga Fund, that will be investing in infrastructure in different sectors of the economy in Africa, with over 250 million commitment already. This is the type, not only of investor, but also the type of member that you will find when joining us. You know, Rwanda works for the Africa that we want. Thank you.
Good morning to our audience and good morning to our panelists. Thank you so much for joining us this morning. Saying hello from all over the world. So pleased to see your faces. To our audience at home joining us, thank you very much. This morning we are excited to showcase our panel, to have a conversation around IFCs and cooperation. And with that, I'm very privileged, pleased, and extremely excited to engage in this conversation with our esteemed panelists. So without further ado, I'd like to go ahead and introduce our panel. And really the theme of the conversation today will be discussing collaboration or competition amongst IFCs. IFCs are often perceived to work in bubbles, to work specifically and solely for the benefit of domestic economies. But in this globalized world, is there room for partnership? Is that a trend? Is that something that we should leverage? And with this, we are really pleased to have a number of representatives from IFCs all over the world. Really a big welcome to you all, and thank you very much for also being on it. And through our technical difficulties, it's been really a pleasure to also ensure that we have everything working out smoothly. So if I may start, to my proverbial left, we have Joy Moynihan joining us from Jersey Finance. Joe is the Chief Executive Officer of Jersey Finance, which have really set the standard amongst IFCs. They are 60 years old plus, going strong. Joe commenced his professional life in the banking sector, rising to the position of the CEO of Jersey Finance and the Isle of Man for a major bank, which included responsibilities for trusts and investments. So Joe comes with a very strong banking background, and over the years, he has expanded his focus as Director of Financial Services with the government of Jersey, where he has worked closely with country regulators to ensure that the island's position as a leading international financial center is secured and continues to be maintained. So Joe has extensive experience both with the banking and private sector, but also working with regulators to ensure efficient and collaborative joint efforts towards positioning JFL. Before Joe joined Jersey Finance in 2014, he worked to establish high reputation regulatory frameworks and business models for IFCs in the Middle East and Africa. So Joe, a very warm welcome to you. Very excited to hear and share in your insights.
Thank you very much. Thank you. Delighted to be here.
Hi, Joe. Welcome. And moving to my proverbial right, Lamia. Lamia, welcome, Lamia. Lamia is coming from Casablanca Finance City Authority. Lamia Merzuki is the Deputy General of the CFCA. She is also someone who joined the CFCA in 2010, so extensive experience in the IFC world, 10 plus years. Before that, Lamia was part of the Aqua Group, the largest private group in Morocco, within which she held the position of Director of Strategy and Organization for 7 years. She has also worked with Green Morocco Plan within the Ministry of Agriculture, and green finance is at the heart of her interest in sustainability. So we will hear more from Lamia on that. And she has also worked on the development of the Souss Massadra region in Morocco. She started her career at Arthur Andersen in Paris. So Lamia is both a bilingual speaker, I think trilingual even, Lamia. And she previously was at the Harvard Business School where she studied, as well as is an executive coach, Lamia. So wearing multiple hats. She's also the member of the Choiseul 100 Africa, vice chairman of the Women Working for Change Network, and a co-lead of the Africa CEO Network. So Lamia, welcome. Pleasure to have you on board. Excited to also hear your insights. Thank you for joining us.
Thank you, Olivia.
Now,
happy to be here.
Henk Jan Hugendorn. I hope I pronounced your name correctly, Henk. My Dutch is not yet there, but we'll be working on it. Henk comes to us from the Qatar Financial Center, where he is Chief of Financial Sector of the Financial Sector Office. Henk is responsible for delivering on QIFC's mission to attract and promote financial and regulated businesses to Qatar. As we know, Qatar and Rwanda are incredibly close and close partners in a number of things. So it has been our great pleasure to include and to enhance the partnership through the financial sector as well. Henk has extensive experience in international finance, management, and transforming and building businesses in the financial sector. Prior to joining QIFC, Henk served as Mashreq Qatar's CEO, as well as the managing director of Deutsche Bank, head of non-bank financial regulations. So really, Henk has extensive industry experience with pension funds, fintechs, and implementing strategic and business plans across Europe. He holds a master's degree in law from the University of Utrecht in the Netherlands and has participated in extensive executive education at the London School of Business as well as NCAD. Welcome, Henk. Thank you very much for being with us.
Thank you for your kind words, Olivia.
Mr. Peter de Proft, welcome to you, sir. Mr. Peter de Proft is the vice chairman of the Belgian Finance Center, BFC, and previously before that was also the Director General of the BFC. So Peter, you have extensive knowledge of BFC. You've actually been in the sector and the banking sector for an extensive amount of time, even prior to BFC. Peter has been responsible while he was at the BFC with the representation of the Trade Association of European Asset Management, IFEMA. He has coordinated the work and daily administration of the IFC, and previous to that has worked extensively in the private sector, both with non-regulated institutions as well as banking institutions. He has also worked in public policy and has really had quite, I should say, extensive knowledge of the banking and financial sector from Belgium. So Mr. Peter, I think you've been doing this work far longer than even I have been alive. So really a great big welcome to you. Excited to have you on and to hear further your insights as well coming from Belgium. Last but not least, I'd like to join and please join me in welcoming Hortense Mudenge, our own Lady HM coming from Rwanda Finance. Hortense is the Chief Operations Officer here at Rwanda Finance, responsible for overseeing strategic projects and the business operations of the company. She is a seasoned management consultant with over 8 years experience advising international development and private sector clients such as Dexus Consulting, as well as delivering on donor-funded investment programs and grant facilities. Hortense holds an MBA from Holt International Business School in Boston and is a graduate of the United States International University of Africa. So big welcome to you, Hortense. Really excited to have you on. Without further ado, I think we can go right into it. Really, we have this exciting panel to discuss the collaboration or competition aspects of an IFC. And really, this comes at a time when we have seen that an important lesson, especially dealing with COVID, is that partnerships work. Whether you look at Pfizer biotech partnership or AstraZeneca, a number of key pharmaceuticals came together at a time when the world was challenged to really understand and find solutions, critical solutions to what the world faces. IFCs are no exception. We know that trends are changing. We know the market is transforming. We have new trends such as green finance. We have new aspects and needs that are being led by Fintech. So really, is it time to maybe rethink finance itself and the global financial sector? As such, Rwanda Finance, including a number of our partners, really seek to establish these partnerships, also to promote the IFCs, but also to share best practices and knowledge transfer. So without further ado, I would like to start off with a question to our first panelist. And if I may start with you, Lamia. I know we live in a we hope to live in a gender neutral world, but I'm still a proponent of ladies first. So if I may call on you, Lamia, given your experience, what do you value in partnerships and what have you learned from them?
Yeah, thank you, Olivia. Good morning, everyone. I'm very happy to see many of our partners, KIFC, Belgium. And to start with, I'd like to share my own experience at Casablanca Finance City. Actually, when CFC was launched in 2010, there were obviously many financial centers already in place. And the idea for us was not to start from scratch and reinvent the wheel, but benefit from IFC's learning experiences. And today we have 15 partnerships with financial centers from all over the world. And as a concrete example, Singapore's financial center has been a model for us. And as a matter of fact, we signed our first partnership agreement with them. And we went there a few times with large Moroccan delegations and learned a lot about how an efficient capital market is designed, how to set up a foreign currency board in a stock exchange, how a friendly business environment is structured, or among other things, what it is to have a dematerialized judicial system. Our second partnership was signed with Luxembourg for Finance, and actually we have worked extensively with many stakeholders, and this was an extremely rich learning experience, especially regarding investment funds and asset management ecosystems. So given my various experiences with more than 15 partnerships with IFCs now, I can say that partnerships can be a great catalyst to, one, scale up the value proposition of the financial center, two, accelerate different kinds of reforms, be it legal, financial, and so on, and last but not least, allow business development and networking among the ecosystems. Now, Olivia, please let me say a few words about the title of this panel and this, collaboration versus competition. As an African financial center, I must say that we in Casablanca have a co-development and co-emergence approach rather than a competition mindset, so to speak. Because, if you take developed countries, the vast majority of them have at least one financial center. I say at least because sometimes there are even two financial centers per country, right? Let's now draw a picture about the reality in Africa. I mean, how many financial centers do you think the continent has? Very few is the answer, and that is across the 54 countries. In other words, Africa has a huge untapped potential, and the only way to accelerate our development is to work together, hand in hand. There is another reality about the African continent, which is that when we take the African countries separately, they lack the necessary critical mass to actually make a real change and be on international investors' radar. And the only way to move forward is, again, to work together and have a regional and inclusive mindset in order to leverage synergies and economies of scale.
Very much, Lamia, and for that background as well. It's really fascinating to hear, and one of the reasons we also are so excited to have you is because, as you mentioned, there are very few African financial centers, and Morocco really has been a pioneer in this. And to hear the model that you have brought to the table, this aspect of wanting and needing to learn from financial centers around the world, what have been best practices, but also strengthening those in partnerships and networks is something really interesting and critical. And actually, I think it would be great to hear from Joe as well, because Joe, you're on the other end of the spectrum, whereby maybe not a new IFC, you are in a market where we have a number of mature economies. What value and how have partnerships been leveraged at Jersey Finance? I like to think of almost Jersey Finance as the granddaddy, one of the granddaddies of them all, right? So how do you, where have partnerships really come into play?
Yeah, I think there are a couple of things that are important to bear in mind. I think that in the past, international finance centers very much focused on their own activity. But what has happened is that our client base and our service providers have become more global. And as a consequence, the requirements for most sophisticated family offices, most sophisticated institutional investors, their requirements now are much more global than they were in the past. So the days of one international finance center doing everything for everybody is pretty much over. So in response to that, we've certainly expanded our global footprint as an IFC in terms of Jersey Finance promoting the industry. But we've also worked more closely with other IFC bodies. We have a very close relationship with City UK. As you know, we have a delegation coming from Rwanda to Jersey next week. They'll be here for 3 days, seeing us, seeing the regulators, seeing the financial crimes unit, again, information sharing. So I suppose if we are the granddaddy, we probably are providing information perhaps more so than receiving information. But it also is important for us to understand what's going on in other centres and to work with other centres. We signed an MOU with DIFC last month. Again, we have a relationship with DIFC which goes back quite a long time, and we see value as two large international finance centres working together to promote the messaging. Because what is really important is that IFCs broadly can often find themselves in the firing line, often from people who are uninformed or have other agendas running. So I think it's quite important that where possible, we speak with a common voice, but also that we help each other raise standards across the sector. Because regretfully, if standards fall or standards are not up to requirements in centres, it will impact on us all. So from our perspective, where we can, we're certainly happy to work to knowledge share, because we think that that level of expertise and the standards that we need as an industry is a key requirement for us long term. So for us, but again, we're quite careful on the knowledge sharing side, because we have not the capacity to deal with all the requests that we get from different centres. So rather than try and be all things to all men, we've identified a number of specific partnerships that we have established relationships with, and we work with and understand their vision, and if it fits in terms of their standards and their aspirations, if it fits with ours, we're certainly happy to work with those centres. And I guess for us, it's important on a number of fronts. It's important for our member firms. We represent the Jersey financial services industry. All of the financial services business, or the vast majority of those businesses, pay a fee to be members of Jersey Finance every year. And we also work closely with our government. So our member firms take great comfort from the fact that we have a relationship with either regulatory level or at industry level with counterparts in jurisdictions in which they are doing business. And we also work with our government to help our government's agenda. So again, our government has a close relationship with the UAE, our government has a close relationship with Rwanda, with UK and US. So we, as the leading industry, I guess, on the island, the biggest employer, we work very closely with government to assist them where we can with their intergovernmental objectives.
Thank you so much, Joe, for that insight as well. And you touched upon something there that we'll come back to when you discussed not being everything to everyone. It's an excellent point, and we'll come back to it in the conversation. But thank you for that insight, and also hearing that even as much as you may be an established brand, an established entity, there is need to continuously develop, to continuously review standards, continuously come back and ensure that we're working. And as you said, if the industry fails somewhere, it's going to have ripple effects across the world. So maybe speaking on to that, because we talk about ripple effects, we talk about affecting and really the depth at which financial services, how extensively they actually are involved in the global economy, and there's almost a sense of responsibility to keeping the best standards, right? Because we realize that there are all these networks that fall into and tie into the financial sector. And so maybe if I could turn to you, Hank, with a question. You've worked extensively with a number of this private sector that Joe speaks to, the non-regulated financial institutions, the fintechs, the investment banks, the asset managers. And we know that an IFC is composed of all of those services. It's not just the authority, or it's not just a promotional agency. Could you maybe speak then, Hank, to what role does an IFC play in the economy? You, who has worked with private sector and is now working within the regulated sector, could you maybe speak to that role, and maybe even why you made that transition, if that is related?
Yeah, thank you very much, Olivia. It's clear the fact that we're all here, we aim to cooperate with each other. But I think originally, and probably Jersey is a good example, the original thought of a financial center was to attract business to your local financial sector and promote that. In many cases, that was also related to tax incentives and make it a special sort of offshore unity. I think those days are over. Clearly, when you look at it now, obviously, many of the financial centers, they send a message, come to us. It's like destination marketing or a gateway, in your case, gateway to a fantastic continent. So we cannot be everything to all at the same time. So I would say the original of financial centers is basically create jobs, attract companies, make it easy for people to set up, make people feel comfortable. That's for instance, I think if you look at the Middle East, that the financial centers in the Middle East have basically copied UK common law-like jurisdictions. So people from an international environment, they feel at home. They understand the rules. We and Dubai and Abu Dhabi, we have independent courts. I think those things will help. There is a trust factor for companies to step in and do their business. But I think we go further, because the interesting thing is that if you look at Europe, it's a mature organization, and maybe there are less financial centers necessary to promote the sector. But the leaders of yesterday are not the leaders of tomorrow. So I see an upcoming emerging Middle East, and definitely an upcoming continent in Africa. And I think what we can do is obviously, first of all, to promote our local economy, but then I think we have to understand each other a bit better and see how we can work together and help each other. And I'll give you the example of Qatar and Rwanda. We are both, I think, very ambitious. Qatar came a bit late to the game. DIC and Dubai was already active. We partly copied that model. But now you see Qatar emerging. There's a lot of money here. And I see the sovereign wealth fund, let's say, investing into the African continent. And Rwanda is one of the first countries. There is a close relationship with Qatar Airways, etc., etc. So we need that gateway to a huge continent. I think the continent is bigger than China, Europe, and US together. You know, it's amazing what the opportunities are. So I think originally the case was, okay, we develop our local economy. Now it's more about partnership and how to leverage each other's interests and work together. I think that is the sort of takeaway I have from this question, Olivia. It's really understanding each other's maybe niches or strengths, because I see still so many cases where, you know, two financial centers meet and they talk to each other. So come to us, and then, you know, nobody listens really. So I think we need to listen to each other and see where are the strengths. And I think in the case of Rwanda, it is clear you guys are the first, well organized, very ambitious, present yourself as gateway to Africa. I'm pretty sure Casablanca will say the same and Egypt will say the same. But I think we have to find those partnerships and work together in line with the strategy of those financial centers. And that is not only the local economy, that is beyond those economies.
Thank you very much, Hank. Actually, we are hearing that theme of the opportunity and the global investor, and the global investor that needs trust to be able to navigate and be able to go and seek those different opportunities, and that Africa is a frontier that is, for lack of using, I know this is used a lot, but untapped, really untapped. And it needs further maybe penetration in regards to investment, in investment delivery. So if I can maybe turn to Hortense on this one, Hortense, what does an IFC play? Because we are discussing Africa being really this new market. We have Casablanca that's been a pioneer, but as Lamia said, we're still very, very far behind when we look at the markets in Asia, when we look at markets in Europe, in terms of being able to service investor needs in Africa. But beyond that, considering that Africa also has very specific requirements, development requirements, what role does an IFC play, an African-specific IFC play? And maybe Lamia, I'll ask you that question as well, just very briefly, in terms of, especially as an African IFC, how do you straddle the line between being in a developing market and therefore being able to meet development needs, but also being able to meet global investor needs? That may just be about, I want to make a lot of good money in Africa. So I'll maybe start with Hortense and then go to you, Lamia.
Thank you, Olivia, and a pleasure to be on the panel with our esteemed guests today. So to the point that you raised, Olivia, which is a great point, for me, how I see the role that international financial centers play, it's really to facilitate economic and social growth at the end of the day. And the critical role IFCs play really is more to do with effective and efficient resource mobilization and capital deployment. Really, that's the key niche. And so when you look at Africa's scenario, right, our scenario, most especially in sub-Saharan Africa, we need to understand what drives our economy, right? Currently, you look at Africa is still largely dependent on a few key sectors, including agriculture, including infrastructure, trade, and healthcare. So it all starts with that. How can we best support these sectors to be able to drive our economy? When you also look at the different reports out there in terms of what's our trajectory, right, going forward, Africa's population is growing, right? It's really growing and accelerating at, fast speeds, and it's largely led by the youth, right? Over 60%, it's still youth-led. And when you look at now, at the end of the day, what's really holding this economy together, it's our small and medium enterprises. So what I'm trying to call out here is that at the end of the day, it's critical to have effective resource mobilization to ensure that we're all working together to create an impact in this, on this continent. And so where I see the critical role that IFCs play, especially in Africa, is because we are very few. There are not many international financial centers. And so with that regard, a lot of the capital deployment or resource mobilization has been here and there and very targeted to specific markets. So now the call out is to say, how can we best, mobilize these resources in a more sustainable way to create a bigger impact on the economy? So for us, our focus is on sub-Saharan Africa, but that's where the value of the partnership is really, because we can't do this alone. It's important to be able to see how best to work together to achieve that impact. So I think that's what I can say to that.
Thank you, Hortense. Lamia, maybe a few quick words from you. And Peter, I haven't forgotten you. I'm coming to you.
Well, as you said, Olivia, there is a unique characteristic that the financial center offers. It's not only a network of banks or a network of insurance companies, but the synergy of a whole ecosystem of actors, banks, asset managers, insurers, and also regulators. So financial centers are really places where we can harness the cluster effect, and when we can, where we can leverage synergies from a concentration of activities. So from my perspectives, international financial centers, and even in Africa, this goes also for Africa, they can, one, play the role of a forcing device, a catalyst to accelerate reforms, as they are the place where policymakers and market players meet. And this has been the case for Casa Finance City. We have been able to push some reforms. Two, they are also here to serve the real economy by closing the gap between Wall Street and Main Street, so to speak, creating jobs, increasing profitability for companies, for instance, and also, as Hortense said, helping international investors access African opportunities in the case of African financial centers and mobilize capital. Three, financial centers can also drive competitiveness and improve a country's competitive advantage. For instance, through developing a qualified talent pool, a friendly business environment, or a specific framework for, let's say, investment funds and asset managers, as you have done in Kigali, and so on. So actually, each financial center has its specificity and brings its own special added value.
Thank you, Lamia. And with that, just to you, Peter, because we hear this very wonderful, role that IFCs are playing. They're driving the economy. I love the word, Lamia, you used, catalyzing the economy, being able to really be a key driver of change and financial innovation. Peter, maybe if you could speak very briefly. I know you've been in the sector and working in the financial sector for a number of years. And one key thing that I know BFC is championing, or is a champion of, is SME financing, is small and medium enterprise development, and really looking at different platforms and different ways that we can inject and we can leverage and continue to develop this. So really, for someone who might be a small business owner, who might say, I'm not an asset manager, I'm not an investment banker, I don't have $1 million. What does an IFC play in my life? Why should I care about this? Maybe you can say a few words on that.
Thank you very much, Olivia, and thank you for inviting me. There's a long-standing relationship, I think, between Belgium and Rwanda. And as a financial center here in Belgium, we've been very active also on different levels, and SMEs is one of them, of course, because Belgium in itself is a smaller country, but it's also at the crossroads of Europe and has been playing an important role there. So before answering your question, I would like first to stress the importance of financial centers and international financial centers in the sense that what we see now, at the same time, there's a globalization and a certain reaction to nationalism. And I think international financial centers and the working together of financial centers is key there. And this is, in fact, something I've seen on the European level, where I've been managing for more than 12 years, European Fund and Asset Management Association. So really doing the balancing act between the different associations, because we are in a global industry, and putting that on an international level. I mean, I've been in the board of the International Investment Funds Association, I've been chair of it, where we've seen the Chinese joining that. And South Africa was only country that was part of that. And now it's very good to see that there are other parts of Africa that are developing these asset management initiatives and that are being part of these associations. Coming back to your question, as a financial center, it is now important. The industry in itself is changing. We see more and more the development of private equity, of fintechs, and there are very often SMEs. And as you have at the same time in an international financial center or in a financial center, these people who are bigger companies who then now are looking to provide money and invest in these new type of economies like SMEs. This is a very, very important key role, and we're bringing together on platforms all these different enterprises and these entrepreneurs and seeing that the flows are going to the SMEs. And therefore, it's also important to do that on an international level and have these international financial centers work together. This is a key issue for development. So the role they're playing now in COVID and post-COVID is going to be more and more important. There's recently been I think, a mission of the World Association of Financial Centers. I think it was to Qatar, Henk, one of the last weeks. So you see the development there, and we see the interest that is more and more growing also towards Africa and the other way around. There was recently then this agreement that was signed with Casablanca Financial Center. Rwanda, you're doing a great job there. And of course, with Jersey, we've been working together since many years there, and in on a European level, where we now have to manage the effects of Brexit to see that we continue to work in global and European thinking.
Peter, and actually you create a great transition to the next question, because I love that you mentioned globalization as a trend, internationalism as a trend, but also we know that there is a competing force, which is nationalism, which is perhaps economies growing a bit more close. We saw the unfortunate scenario around Brexit, and but we're not, of course, going to touch too much upon that, but really discussing, right, what we can take it for granted that the future is globalization, but we know that there are competing forces. We know there's this competing tension. So maybe, Joe, I could turn to you, not to put you on the spot, don't worry, I won't talk about Brexit. I won't ask you to comment on that. But it's more to say, really to raise the idea that we are now in this, we talk about a post-COVID world, and we sincerely hope we are in the post-COVID period. But it sounds like, and when you hear our conversation, you hear this continuing theme of IFCs becoming more socially conscious, if I may say, becoming more conscious of maybe their position in an economy, whether through the development of SMEs and becoming a kind of a funnel to help that growth, or to maybe promote and pioneer green and sustainable ways of doing. So I'd love to hear from your experience, especially working in the Bailiwick of Jersey, but also within the financial sector, the UK financial sector. Maybe what has that trend looked like? Have you seen perhaps a trend of IFCs becoming more socially conscious? Are we has there been a transformation? Is that a real thing, or has it always been the case and we're just paying attention to it? And the second part of my question would be, then how do you see that role being played in the post-COVID recovery?
Sure, I should make a declaration in relation to Brexit and EU. I'm an EU passport holder. I'm Irish, so I've never been part of the UK. And Jersey actually is not part of the UK, or indeed was ever part of Europe for financial services. So for us, Brexit has not had a major impact on our industry per se. Just to pick up the first part of your question about ESG and what has happened post-COVID, and you're quite right, ESG is certainly much more of a focus perhaps than it was pre-pandemic, but I would say as a centre, ESG has been very important. So a lot of our investment managers. So we manage a lot of pension funds and have done for many years. And the demands of the pension funds on our investment managers in recent years, there have been questions around the ESG credentials of the organizations that they're investing in. As a center, and you mentioned at the start, we've been involved in international finance for 60 years here. One of our key strong points has always been governance. We provide strong levels of governance on investment funds that are managed here, on companies that are managed here. And for us, governance has been almost, I guess, probably one of our key competitive advantages because of the depth, strength and depth of the industry that we have there. I think on the social side of ESG, we've been in reasonably good position, but probably where as an industry, I guess no different to many financial services industries or financial services businesses indeed, environment has been there, but in some ways perhaps not given the attention that it deserves. So what we have done in recent times, we spent a lot of time last year working with an independent environmentally specialist on looking to identify what our ambition is in terms of sustainability and what we should be trying to do as a centre to achieve that ambition. And one of our goals is that by 2030, we will be recognised as a sustainable international finance centre. And that is not, we haven't defined that as a centre for sustainable finance per se. It's that the industry will be sustainable. And that includes being able to deal with sustainable opportunities, but also that we drive the industry down the sustainable route across the industry. And we're working with government to drive that across the island. So we have an ambition set for 2030. We have a 2-year roadmap, which we're working at the moment, and we're making good progress. But we're quite conscious that we can't say we're a sustainable financial centre if the island itself isn't taking steps to move in that direction. So we're doing quite a lot of work in that area. And in terms of the future, the way I see it is that in a number of years, sustainability and sustainable finance will be built into the industry across the board, and that we will develop as an industry to be much more, because look, our customers are driving it, and we want to ensure that we're able to meet the demands of the customer, and if the customer demands it, we're going to have to, but it's going to be a transition. It's not going to happen overnight. It's going to take some time. But yes, certainly, I think it's been highlighted, I think, by the pandemic, and given a lot more, I guess the speed of transition has been driven by what has happened from a pandemic perspective.
Thank you, Joe. And something you highlighted, I think it's important and good to continue to call out, which is to say, you mentioned being driven by the investor, by the market. So I think that's something very key, is that IFC is actually driven by the private sector. They're driven by the demands of these investors. It's not QFC, it's not JFL that kind of sets the demand. We respond to the demand and we ensure that the markets are catered to. And I like that because it means that we have to keep an eye on the ground and understand what it is the market needs, what it is the globalized market needs. And so maybe, Hortense, if I could turn to you a little bit, because in speaking to that, what is the role of, for example, the KIFC or IFCs in general in that post-COVID recovery? Thinking again along the lines of that need and some of those needs that have just emerged through the COVID pandemic.
Thank you, Olivia. I think I will follow on to what Joe was mentioning in terms of what are these emerging themes that are coming up. For sure, COVID-19 has shown us the need to work differently, and it has shown us it has demonstrated the need for us to focus and prioritize on impact and sustainability. So for us as Kigali International Financial Center, it's not different because this is really a wave and a trend that is happening globally. So with us, it's still the same. At the end of the day, we have a clear focus on how can we be more sustainable in our investment, in our operation, and also in our regulation, actually. So the fact that we're here, we are creating that reform that Lamia was talking about to ensure that we're enhancing the competitiveness of our own financial industry to be able to meet this critical need for investors and for financial actors. And then the second thing I would also say is about that technological revolution that is also happening and that COVID has clearly accelerated for sure, and most especially in Africa. So it is about how can we better tap into the opportunity that technology is bringing to now bring it closer to the financial industry, to create that, to accelerate the inclusion, financial inclusion for the bottom of our pyramid. So that has also been a trend, and that has also been an area where we really want to leverage our financial sector to create that impact. And then the third but not least is something I touched upon earlier in terms of at the end of the day, what drives our economy. It's a small businessman, especially for Africa and sub-Saharan Africa. It's a small businessman. And so to us, really the role we play is seeing how we can really accelerate that resource mobilization that they can easily tap into to be able to also grow and create that sustainability in their own operations. So I think that's what I can say to it, that COVID has really changed the way we look, our outlook, and it has allowed us to focus really on the priority for impact and sustainability.
This is, everyone is, in basketball, there's a term called the layup. And I don't know if you all watch basketball, but there is the assist, someone who passes you the ball, and the person who makes the dunk. I feel like you're all providing me a layup because it's a wonderful segue to the next question. Because trends from the GFCI index, the Global Financial Centers Index, which is the premier, I should say, index or ranking of the competitiveness of IFCs, earlier this year came out saying that specialization remains key to IFC development. And I know a number of us have briefly touched upon that word specialization, that word really, and coming back to what Joe said, not being everything to everyone. And so for this next question, I'd like to hear, first of all, what your specialization or what you would deem to be a specialization of your IFC and how you have leveraged your partnerships to promote this. And really, when we're talking about specializations here, we're looking at the future of IFCs as we've discussed. So whether fintech, green impact, green finance, impact or governance, as Joe also rightly pointed out. So I'd like to hear a little bit more. Maybe I can turn to Hank and then turn back to Lamia, and then we can go on to Peter and Joe. But really to hear, is this true? Is specialization a key to IFC development? If so, what is the specialization of your IFC? If you could give one. I know there are a number, but maybe the one key highlight, and how you've leveraged partnerships around this. So Hank, to you and Qatar, if you could give us some insight.
Yeah, obviously I would like to mention many, but allow me to mention two. I think Islamic finance is a key area for us and probably for many other Islamic countries around us, because Islamic finance has always had the social responsible investment mindset, which looks very much like ESG and green. So there is a history of Islamic finance and investments, and this is the time for us to promote this beyond our own country. And I think the Islamic finance investment, in this case, opportunities, they deserve more attention. I think we should team up with all the, I would say, Islamic countries and promote this more, because it will attract international investors. So I think that is a task for us as financial institutions. You can call it a special focus. And we would love to work on this. The same thing, the Islamic finance is also very creative when it comes to financing SMEs. And that's something we need to do in our local markets. Many of our local challenges are the same. So if I say the other focus for us, specialization, is to develop the local capital markets, because we have a traditional banking sector like many of you guys. And the local, specifically in local currency, capital markets are not yet developed, and we can learn from each other. And that's another specialization that I would like to do. And then, of course, somebody else will say fintech, but but I leave that, for instance, to Casablanca. But that's also an important one.
Thank you very much, Henk. I know fintech is probably going to come up as well, but I do love that you also raised Islamic banking, because that is a key component for a vast majority of the world as well, and needs really that specialized attention considering some of the trends and ensuring that we keep up some trends and we continue to be innovative around that. Lamia, I know that in your market you also deal with Islamic banking, but maybe also other specializations that you might want to highlight through that Casablanca is focusing on, or through your own work, because you also are involved with a number of networks that leverage and catalyze financial development, and maybe how partnerships have helped you in that.
Yeah, sure. Actually, our first specialization is about helping companies do business in Africa, and we have a specific value proposition for that. Obviously, we are also specializing ourselves on sustainable finance, on fintech. We, as you know, Olivia, we launched the Africa Innovation Lab to as an incubator of fintechs. But now let me do the link with your second question, which is how are you leveraging your partnerships to promote the future of finance, right? In fact, in CFC, we have two kinds of partnerships: bilateral partnerships and multilateral partnerships with networks such as FC4S, YFC, and so on. And I'd like to share my experience as co-chair of the FC4S, the Financial Centers for Sustainability Network, which is the network of the world's green financial centers, born out of the Italian G7 presidency in 2017 in partnership with the UN. Today, this network represents over 80% of global equity markets, with 36 financial centers across Europe, Asia, Africa, and the Americas. Kigali is part of it. Jersey is part of it also. Qatar, I think, not sure. And the purpose of the network is to mainstream green finance. So as co-chair of the FC4S, I believe that the future of finance can only be green and sustainable. And I think that with this global crisis, we have a unique opportunity to create a new system that is fairer, that is more sustainable, and obviously more innovative and digitalized. So actually, how are we leveraging this multilateral partnership, so to speak, to promote the future of finance and to promote sustainable finance? Actually, we do it through multiple ways. And I'd like to share with you how we do it in the FC4S. We are actually supporting IFCs in their sustainable finance roadmap and even helping them put in place this roadmap from scratch. And there is a specific process for that. You have heard about the assessment program, which is a major tool that we have put in place 3 years ago, we meaning the FC4S. And this tool takes the form of a survey with a specific framework sent once a year to all the financial centers members of the FC4S to measure and track the progress in terms of sustainability. And data is crucial. You have talked about specialization, but if we manage to evaluate the state of this specialization, be it green finance or fintechs or so on, and if we manage to show the progress using data, then we will be able to gain momentum and make a real change. So in the FC4S, once we gather all this information and analysis, then we can design a strategy and a sustainable finance roadmap. And this has been the case for many countries, recently for Ireland and Malaysia. At the same time, we are also leveraging bilateral cooperation that has proven to be effective, obviously. So for instance, we, Casablanca Finance City, signed a partnership agreement with Lagos Financial Center, namely the FC4S Lagos, to work on accelerating the implementation of our respective SDGs. We were also able to support fellow African partners to join the FC4S, such as Kigali and Abidjan. And we have been working a lot with my friend Ntudi, especially on green finance. And the same goes for Ivory Coast. We are actually supporting them, supporting Abidjan to put in place its financial center body, as well as its green finance roadmap.
Thank you very much, Lamia. This is a call to actually what you were sharing is this partnership that's already existing through FC4S, this idea of collaborating around innovating of green finance and the models that are being used. So there are definitely existing models, whether it's FC4S, whether it's the World Alliance of International Financial Centers, of which I know a number of us are a part of. So thank you for that very concrete example to how we're pioneering and IFC's partnering to pioneer the future of finance. And maybe then I can turn to you, Mr. Peter, which is to say, as the vice chairman of the BFC, is there a specialization? I know we've talked about SMEs through Belgium, but a specialization or something that BFC is really keen to innovate or be positioning itself in? And in doing so, how is it leveraging any partnerships? Is it doing it in its own? If you could maybe give some insight around that.
Thank you. Well, a lot of it already has been said. I mean, all the trends that we're looking on. And I think the added value of the Belgian Financial Center is the fact that we are at the crossroads of Europe, but also at the crossroads of relationships. We have relationships with all the countries in Europe, where you have the bigger countries, the bigger financial center. We're more of a neutral country. And we have, as I would say, the center of the regulation and the supervision of Europe, relations with everyone, with the European institutions, with the regulators on a European level, but also on a worldwide level, and with the international financial centers. And we're collaborating there from a neutral perspective. We're not a competitor to anyone. We are a partner to anyone, to all of them, and really linking them. And I think this is the added value, because we have this long-standing, I would say, neutrality ability that makes the Belgian Financial Center easy to come through. We have our banks, our all the other financial institutions, insurers, the industrial companies, the SMEs in the modern technologies, but we're keen on working with everyone. And this is Africa, this is Asia, these are the other financial centers. And our added value, our specialization, if you want, is having these neutrality and these diplomatic skills, working with everyone without being a competitor.
Thank you, Peter. So I really leveraging Belgium's value proposition already, being the seat of the EU, really being that neutral. And I love how you said the crossroad of relationships. That's a wonderful way to put it. And keeping that neutrality and being this maybe the super connector, right, of all these different regions, different markets.
Absolutely.
Super connectedness. That's a wonderful value proposition that you've raised. We don't think about that, but that is actually going to be a need in a globalized world as well. Joe, maybe over to you. And I know you've touched upon governance, of course, and regulation being one of the key value propositions that JFL provides. But is there maybe another, and we talked about fintech and impact and all of that, but is there maybe something that you do want to kind of leave in the audience minds in terms of what JFL is looking at in terms of the future of finance and any of the key partnerships that you may be leveraging for that?
Yeah, I think without repeating a lot of what I said at the start, I think that customer demand is that we need to be able to provide a global service to a lot of our clients. And I guess what we have developed over the last certainly 10, 15 years is a much broader global presence, promoting Jersey in lots of different jurisdictions. We have in 5 continents now, we have representatives of Jersey Finance on the ground. And we see probably what has evolved for us is a much more global business. So we just finished some research we launched last week with independent providers who have identified that we, if you take Africa as an example, we can support £5 billion worth of GDP in Africa, supporting over 916,000 jobs, directly as a consequence of capital that is redeployed through Jersey into Africa through different vehicles. If I was to talk about specialist services and named one my industry would shoot me because I represent a very broad church of businesses, from banking to private wealth to funds. So as a center, I guess the key points I made earlier on about governance, about experience and expertise, about the stability of the jurisdiction, certainty of outcomes is very important, particularly for international investors. And we have an independent judiciary here, very experienced in the international financial services market. So all of those combine, in my view, to mean that we have we've established a track record which we think we can continue to build on. One point I would make is that I don't necessarily think competition is a bad thing. What competition does is it drives us all forward to make sure that we remain relevant to our customers, that we react to trends that are happening elsewhere, and that we have to deliver a quality service. Because if we aren't being competitive, where does the customer go? So I think competition isn't a bad thing, but I do agree with all of the comments earlier on about we can learn an awful lot from each other by having the right levels of cooperation. We can deal with the macro issues better collectively than individually. And we can, I guess, in some ways deal with the international community in terms of trying to land our messages properly about what we do as opposed to what we think that we do. Not too sure if that answered your question.
Yes, it did, Joe. It did, because I do believe that you are encompassing a number of key themes, but you have answered the question. Of course, and it's great to have diversity as well, right? Which is to say, maybe competition is good. Maybe we are not going to focus on any one. We're just going to continue standard. So that's really what this conversation is about. And there is no one size fit all. There is no one mold. And that's what creates the richness of the conversation, I think, as well amongst IFCs. And so really, lastly, before I come to our last question, briefly, Hortense, when you look at specialization, when you look at the future of finance, especially from the eyes of KIFC, which I think on this panel, we are the newest. So to the grandfather, I think this is the baby of the panel. From that standpoint, how are we leveraging? How's KIFC leveraging partnerships, and where does KIFC see its specialization in terms of development?
Thank you, Olivia, and thank you for that note that we are the baby and we just got our name. So for sure, there's a lot of learning to do, as Joe said, and there's a lot of friendly competition that we really want to be able to engage in, to be able to see how we can work together. So in terms of future for finance or specialization for Kigali International Financial Center, it's really not different from what my colleagues have really mentioned. And I think for us, it's twofold. It works, or it focuses on geographic positioning, especially seeing that Rwanda is at the epicenter or at the crossroad. I like the word Peter used. We're literally at the crossroad of most of these mature and larger markets. We're right at the center, and we are actually part of these regional blocks. So for us, it's about geographic positioning, and the specialization we can offer really is that as we're seeing a trend, an increasing investment flow into these larger economies that surround us, as we're seeing this capital redeployment that Joe mentioned that actually touches on Eastern, Central, and the Sub-Saharan African market. To us, it's really what value can we offer to investors looking to really invest in the region. And for us, it's really the specialization of domiciliation, considering that we have good governance structures, considering that we have established that security mechanism around it. It's really offering that platform for regional investors to use our jurisdiction for that. And then the second, I think I would say, area is more in the niche specialization that I believe also everyone has talked about, including Lamia, green finance. We're no different, really. We want to see the role we can play to encourage more green related investments, ESG investments, and to see how investors and our own financial actors can be able to leverage our financial center to really establish green-oriented businesses, to be able to set the regulation, to support the use of capital markets, for example, for resource mobilization. And then the last but not least to us, as a proof of concept country, really, is to see how we can create that, continue to create that platform for fintech actors to be able to come and set up shop, to pilot the structures, and to see how we can really build on that fintech ecosystem. So I think that's how I can say in terms of looking towards the future and the areas we want to really focus and draw attention to. It would be in our geographic positioning, as well as in our niche focus on green finance and fintech. And most of our partnerships you'll also see are really based on that, whether it's with Qatar, whether it's with Belgium or Jersey Finance or Casablanca. It's really around how we can work together to enhance competitiveness of our industries around that.
Thank you very much. And this really comes to our last question. We are a little bit over time. And so I really thank our panelists as well there. I know you're very, very busy today. If you would allow maybe one last question from me. And I know we have two or three questions from the audience. I can direct directly to everyone. But really we should be wrapping up in the next 10 minutes or so. For those of us who may have meetings, please kindly send them a little email, tell them you're talking to Kigali. It's an exciting conversation. But we will be coming into our Q&A shortly. So for me, really the last question, and this is a question that I would love to throw out there. I know we've talked about partnership. We've talked about collaboration. We've talked about really, IFCs and being friends and all of this. But I now want us to really kind of put a vote to it amongst this panel, and you give your one verdict and your one sentence. Joe, I love that you said, yeah, you know what? We talk about collaboration and partnership, but competition is good. And I do believe that all of us on this panel, especially considering the work we've done, there's a little bit of a capitalist in us. There is somebody, we do believe that competition is good for business. So I'd like to put it to a vote. In this new world, is it really collaboration or competition? What is going to be the best driver of financial innovation? And this one, please feel free to answer as you feel. Lamia, thank you. You're going to start us off. Please go for it. Is it collaboration or competition? And in one sentence, why? Where you would throw your vote?
Olivia, I would say co-petition, which is the mix between collaboration and competition, because there is no zero-sum game. There are no winners or losers. We are all working on the same agendas. And in this context, building knowledge and exchanging best practices is key to COVID recovery. So co-petition.
Co-petition. Did everyone get that? I love this, Lamia.
I vote for Lamia's new word. Absolutely. I agree.
Me too.
We have Joe as well in there.
I vote for it too.
I would like to add basically, yes, of course, it's true. But I think the first movers or the most ambitious ones will think about competition will win or will take the benefit. And I see this ambition in Rwanda. I see a little of complacency with the previous leaders, from our financial world. So the new guys like Kigali, but I also see other emerging markets will definitely win because of the ambition. Maybe because, as you say, you're young and you're new. You guys will do well, and others will do well as well. And sometimes just being small, helps. So a little bit of disruption, I would say, from the newcomers.
Thank you so much. So I think it sounds like we're going with this cool petition, but with a tinge of competition. So I love this. I love to think that this may be the birth of a new term. Let's go and let's make it viral. Cool petition. Being the one, but Qatar, excuse me, Hank, I keep calling you Qatar. I do apologize. But I guess you're wearing...
I don't look like a Qatari, but I'm happy to be Qatar as much as possible. We have no ambition.
Hank, that is actually the new world, right? We're talking about global finance, global investors. So really, we are now a globalized community. And the key takeaway is exactly that. And I'm glad that you rose to my challenge. Thank you very much, because ultimately, at the end of the day, we still need a tinge of competition. We still want to challenge each other. We still want to be able to say, what will be the best and what can I provide the best for my global investors? So I'm really into this, and I vote with you, Lamia, and we're going to go and see if we can make it into a hashtag. I know the team is on. Maybe we should hashtag co-op petition and see if we can pick it up over the course of the morning. So really, this was my last question, formal question from the panel. Thank you. I only have maybe one or two more questions just from our audience members who've been following us on YouTube, who've been sending us some key questions. And actually, the first question is to you, Joe. It's as we talk about IFCs facilitating fintech, what should regulators do more? And I think this is a great question because we hear about private sector and we hear about enabling fintech, but what can regulators actually do to enable this emerging trend?
I think that and this is not directed at our own regulator, but more generally, I think regulators need to be open, and they need to have the expertise in-house to be able to deal with and understand the proposition. And the thinking has to change. So what we have all been traditionally used to is changing as a consequence of fintech. And I think one of the areas where regulators struggle a little bit, I think, is that they get asked almost to approve a piece of technology, or maybe endorse a provider of technology, which is sort of dodgy ground because, that potentially leaves them open to problems later down the track. So I think there's a bit of work to be done on internal expertise. And also, I think about defining exactly what, as a regulator, they're approving. Because sometimes it's a fine line between saying, from a regulatory point of view, what you're proposing looks fine, to customer problems down the track where the customer would say, well, the regulator said it was okay. And somehow we've got to try and put a definition around that as to exactly where the regulator's responsibility starts and ends. But I do think it's improving, but I think probably, and it's different in different jurisdictions.
Joe, that's really a great point you raised, because as we talk about financial innovation, as we talk about pushing the envelope, we have to realize that there are two different speeds going on. You can have the private sector speed, or like you said, the tech speed, but is the regulator also ahead? And are we asking regulators to approve tested? It's a little bit like what happened with Pfizer, where regulators or had to be in a tough position to approve a vaccine really quickly and ahead of the usual procedures. So we're maybe requesting the same thing from fintechs, putting regulators in this space. So maybe regulators, we need to think about what is really their role and where do they come in, and what can we do to upscale that as well.
Yeah, I was just going to say, because when you see what has happened in the past, if you take investment, personal investments, and the personal investment, the advisor is approved by the regulator. And if something goes wrong, the customer goes after the regulator. When in a lot of cases, it's not necessarily the regulator's responsibility. So when everything's going fine, it's wonderful. But if something goes wrong, people look to blame somebody, and invariably it'll be who allowed these guys to do business, and that ultimately would be viewed as potentially.
May I please come in here, Olivia? Sorry. When we're seeing the changes that are going on, for example, the influence that blockchain is going to have on the industry in general, it's huge. But now at the same time, we see that there's a number of initiatives that are being taken by the legislators already, for example, at the European level, but I also know in the UK and in the US, for this new digital evolution that is coming in, and we'll be seeing that implemented in the next years. It is a challenge, and we know that at the same time, the regulators, they're trying to recruit people, as Joe rightly said, to be able to cope with this and to understand this. So I think there is a positive evolution, and that compared to previous crises, regulators are aware and legislators of what is going on, but everyone is competing at the same time in a huge, I would say, evolution to have the right people to deal with it. And we see at the same time the new generations also dealing with it. We've seen meme stocks, we see the development of cryptocurrencies. There's a number of challenges that have to be dealt with at the same time. And I think it is important that together with regulators and with legislators, we as an industry think about how to implement it in the best interest of the customer.
Peter, actually, this next question comes to you, and it's really in line to this discussion. So we're talking about the regulators, maybe especially considering your background, the banking industry, right? Because there's also innovation that will be required to be able to perhaps meet the needs, meet the unique characteristics and nature of fintech, the blockchain, you know, all this kind of digital revolution. So maybe some thoughts around what banking industry could do more. I don't know if this is something that you may have some insight on. And of course, anyone else on the panel, please feel free.
Yes, we're looking at that very closely from the IFC, but I think it's on top of the agenda of the banking industry. That is a change that is going on. The relationship between the banks and the customer is changing fundamentally. I mean, you see the bank branches are disappearing. There's a new type of personnel that is being recruited. The way of working is being recruited. I mean, from one day to another, there was a change, and for 90% of the workforce was working from home, which is a huge amount of people in Europe, but also the customers are now getting used to working digitally. So the investments in the blockchain, in the development of the industry are huge. And I think that the effect of what we're seeing now is going to be fundamental in the structuring of the banking industry. And yes, we're going to more mergers with other institutions. So we have a kind of a balance between the huge institutions where we see more mergers and then the very specialized ones. So there's different trends in the banking industry, also the development of the wealth industry, which is very important. And these trends are influenced enormously by the digitalization and the blockchain revolution.
Thank you very much, Peter. And really, last question, and this one I really would like to open the floor up as well and invite also Hank and Lamia and Hortense to share if they have any ideas. But we're talking about regulators. We've talked about the banking industry. Of course, feel free to bring in any other actors that may be pertinent to this question. But maybe the question also is, what can fintechs do more? I know we're talking about unicorns and the such, but is there something that fintechs themselves can do more of, whether to enable themselves a lobby? So maybe we start with Hank and then we can go to Lamia.
Okay, yeah, so I'm passionate about fintech. I'm an ex-banker. I didn't know much about it, but I have learned over the last 3 years a lot. There is clearly innovation, and I partly disagree with the previous comment that the banks have been sleeping, and this is the time for the banks to wake up. Because the banks serve the bankable people, but there is a huge opportunity to do and work on financial inclusion, which are basically the unbankable or whatever, the workers or the SMEs. And this is the challenge for fintech to unlock the potential of those groups, which traditionally the banks have not been serving. The banks still have the trust factor. So if they work together with the fintech companies, and that is, I think, the task of the fintech and the banks to work and partner together to basically unlock that great potential that is out there. And that is my passionate outcry.
Thank you, Hank. You've thrown the gauntlet there. The banks need to do more. They need to wake up. So to our bankers out there, I hope you take up that mantle. Lamia.
Well, again, digitization is very important for Africa. There was a leap forward very recently. And I'd like to make the link between sustainable finance and fintech. You know, all these tech-driven ESG practices, because it's, again, very, very important. I think that the technologies have the potential to unlock access to new levels of data through increased granularity, real-time data, improving the overall data management process. And I think that policymakers should incentivize the refinement of technologies and their applications to develop, all kind of metrics that support the measurement and disclosure of sustainability metrics. And also the policymakers in Africa should foster both investments and education in new technological solutions. I think that capacity building here is key. I mean, in Africa it's the first priority today, capacity building in fintechs.
Thank you, Lamia. It's really clear. And Hortense, if I can end with you, I know you had the capacity building and the skills development, maybe a great way to segue into this. But what can fintechs do more, or what can regulators do more, or the environment do more to foster and enable, fintech as an enabler or as a trend, as a rising trend?
Thank you, Olivia. And it's a great point Lamia makes in terms of technology is now getting, center stage. And it's really causing that trend and the transition that we're seeing, especially in our market. So for us, especially as a new market, capacity building is critical to ensure that we're not left behind and to ensure that we're actually moving ahead of the curve. So it is absolutely critical. And in terms of now the big picture of what role fintechs can play, or even technology, as we've seen from COVID, it's really about convenience and ease at the end of the day. So we're seeing really banking and banks and these big, large-scale financial institutions doing away with the traditional infrastructure and opting for support in terms of how can you make transactions faster, quicker, and more easy for consumers. And that's really the critical role fintechs can play, to be able to support these institutions to deliver on that. There are also in other markets where fintechs are actually even overtaking, because they are offering that solution that reaches on the untapped market that Hank was talking about. And it's even more important for us in Africa because the untapped market is really large, and technology is playing a key role in really reaching the underserved and the unbanked. So fintech is going to continue playing a key role in terms of bringing that inclusion. And to the point also Lamia makes in terms of data that is really informing decision-making, we're seeing the role technology is playing for regulators in the sense of RegTech. That's also an area that is really improving the area of transparency and governance. And for us, it's really critical to be able to tap on this market to ensure that we are all moving along together, both as regulators, private sector actors, to serve our ecosystem. And at the end of the day, the consumers. So it will continue to play a key role for sure.
Okay. So thank you very much for that. And we really leave at this point. We're 6 minutes past the hour. Thank you again very much for this panel, for your time, for your attendance. I just want to do one last round around and virtual clap of applause to Mr. Joe Moynihan, to Hank from QFC, to Peter from Belgian Financial Center, from Lamia from Casablanca Finance Authority, and of course our very own Hortense from Kigali International Financial Center. These are some of our really heartfelt partners. We are in this journey together in co-op. Petition is a co-op, petition was a cooperation. So we are really excited to see the future. We are transforming together in this new world. Such a pleasure to be on this video with you. I wish you all a most wonderful rest of the day. And to our audience, thank you and have a lovely rest of the day to you. With that, we close our session and I send you all greetings from Kigali.
Thank you for being a fantastic moderator, Olivia.
Great.
Thank you very much.
Bye. Thank you.
And with that, we have come to the end of the KIFC's inaugural Year in Review. To make his closing remarks, I'd like to extend a warm welcome back to Nick Barige.
Thank you, Makeda. I wish to express my sincere appreciation to the panelists from partner IFCs. As a result of the COVID pandemic, finance to developing countries has declined, and this includes private finance, which is needed to finance public infrastructure and build the private sector. As you've heard from our panelists, IFCs can play an important role in overcoming barriers to investing in developing countries by providing investors with secure jurisdictions, financing structures for pooling risk, and tax neutrality. Only 6 months ago, our board chairman, Tijam Tiam, made his first visit and told us to think big. 6 months later, it's incredible to look back to what has been achieved. It's important that we have first taken the time today to update you on the progress made. And second, we commit to work collaboratively in the year ahead. Despite ongoing challenges presented by COVID-19, there is a cause to believe that 2022 is a year that Rwanda bounces back from pandemic and that KIFC achieves its goals. IMF forecasts sub-Saharan economy to expand by 3.7 in 2021 and by 3.8 in 2022, whereas Rwanda's economy is forecast to return to pre-COVID growth rate, achieving between 7 and 8%. Earlier this month, Rwanda set out a series of ambitious plans to achieve carbon neutrality by 2025 and has set out its stall for one of the most attractive places in the world for sustainable investment. As KIFC launches its 10-year sustainable strategy, we will play a crucial role in mobilizing the necessary capital to facilitate this transition. Rwanda now offers a highly attractive fintech environment, and in recent years, we have built a reputation as a proof of concept hub and a gateway to African markets. New initiatives have been created to offer a competitive environment for increased fintech investments in Rwanda in 2022 and beyond. Now, I want to thank you for being here this morning for the presentation of our annual report and the panel discussions. It has been an honor to work with you all this past year. I hope you are as excited as I am for what lies ahead. Finally, as we are entering into the festive season, let me take this opportunity to wish you a Merry Christmas and a happy and prosperous New Year. Thank you.
And we have come to the end of our program. Thank you so much for tuning in to this very special inaugural Year in Review for Kigali International Finance Center. My name is Makeda Mahadio. Thank you so much for joining once again. And until we meet once more, happy holidays.